Hi everyone, Bill Lethman here for MoneyEvolution.com. In today's video, I'm going to be talking about a couple of specific tax strategies on how you might be able to take advantage of the recent tax law changes that went into effect at the beginning of 2018. They're called the Tax Cuts and Jobs Act. And here's a couple of things that you might want to think about as you do some of your tax planning. Number one is I think you want to understand always where you are within your tax bracket. And this is something that we've talked about extensively on some of our other videos, and especially right now as you're trying to figure out how these new tax law changes might impact your tax situation compared to what they were previous to 2018. What we want to look at here is a couple of things. Number one is how much of your income is subject to tax, and the Tax Cuts and Jobs Act made a couple of specific changes to that. They doubled almost the standard deduction for most people. They eliminated some personal exemptions. So the first part of this is understanding how much of your income is going to be subject to tax. And again, if you're interested, I've got some other videos that I get into a lot more detail on that. You can probably find them on our YouTube channel or over on our website at MoneyEvolution.com. The second part of this, though, is the tax brackets themselves. And this is something that probably most people are paying the most attention to. Pretty much across the board, most of us are going to see a reduction in our tax rates themselves. And because of this, I think it's going to present some very interesting opportunities, especially as it pertains to how and where we save money for retirement. So the first part of the strategy is looking at where you're saving money for retirement. And specifically what I'm talking about here is Roth versus traditional retirement accounts. And essentially, what we want to look at here is if we want to look at our tax brackets today as they might be in retirement, the big decision here is going to be, are we going to be in a higher or a lower tax bracket in retirement when we go to take this money out? If we're going to be in a higher income tax bracket in retirement, then it makes sense for us to pay the taxes right now, put the money into a Roth account, and then enjoy that tax-free growth and tax-free withdrawals as we pull that money out in retirement. If we think we're in a higher tax bracket today than we're going to be in retirement, then it might be better to take that tax deduction today and pay the taxes in the future. What we've generally found is as we're doing financial planning for most people, we tend to pretty much be in about the same tax bracket in retirement as we were while we were working. But now again, with this Tax Cuts and Jobs Act, because we're seeing a reduction in those tax rates, we're finding that it's not so much true anymore that we're going to be in the same tax bracket, but because we're in this lower tax environment today, it might make a lot more sense for us to do these Roth contributions instead. We also talk about this a lot too, but having some tax diversification also makes a lot of sense too, so that you don't have all of your money in this traditional bucket. And there's a lot of other reasons for having this spread out a little bit more evenly between Roth and traditional. The second piece of this is I think one of the big opportunities here, and that is to look at Roth conversions. And again, this is something that you want to do as a part of your financial planning process and understanding what that future tax rate might be in the future versus what it is today, understanding where you are within the tax bracket. But is there an opportunity where you can pull some money out of a traditional retirement account, move it over into a Roth account, pay those taxes today at that reduced tax rate, and then have that money growing tax-free for retirement as you can withdraw that in the future? And what we try to do there, and that's why we want to understand all three of these things here together, but again, we want to understand where you are in that tax bracket. So let's say that you're looking at doing one of these Roth conversions, and you can go all the way up to $165,000 before you go into that next tax bracket, but your income today is $130,000. So you might be able to take $35,000, convert it from a traditional retirement account, move it over to a Roth, and still stay in that same tax bracket. And again, that might be 3 or 4 percentage points lower today than what it might be out into the future. So again, a couple things as you're putting together some tax planning for your retirement. Take a look at where you're saving that money, Roth versus traditional. If you'd like to learn more about this, you can check out my video tax case study where I get into how to create a tax plan for your retirement. If you're interested in learning a little bit more about what we do with the financial planning, the cash flow, where we can kind of map this stuff out for you, we have a process called Wealth Vision, and we'll put a link below this video today where you can check that out as well. If you'd like, you can schedule a free intro call with me. We can talk about whether or not it's something that makes sense for you. So with that, I hope you got some great value out of today's video. If you liked it, hit that like or subscribe button, and we'll see you back in one of our next videos. Thanks. Have a great day.